It's great to have your company for the weekly this Friday, the 5th of March. I'm Jessica Amir, a market analyst with Bell Direct. Well, the month of March, historically a negative one, is followed by a rebound in April. That's according to the average Aussie share market return since 1993. But so far this month, although we're just days into the month, the market is up 1.3% as at Thursday's close. Now, this has helped the broad market snap its two-week losing streak. Financials outperformed again. The biggest bank, CBA, rose 6%, its biggest weekly gain in 5 weeks. The biggest drag on the market, healthcare, as CSL shares sank almost 3%, taking the blood therapy giant's shares to an almost 2.5-year low. So is it time to buy CSL? Well, UBS thinks so, because CSL's blood plasma collections rose 12% in February, and UBS sees its revenue growing 40%, albeit off a weak base. So keep in mind, CSL shares are in a short-term downtrend due to COVID-19 lockdown. So a common strategy is to average in over a period of time, so you've got more of a chance of picking up some of CSL's shares at their lowest points. So which companies are showing momentum and share price growth in this environment? Well, take your pick. BlueScope Steel, BSL, up 10%. Stockland, SGP, up 10%. Big Four Bank, ANZ, and Nufarm both rose 8% this week to Thursday, all beneficiaries of recent economic growth. Who dominated headlines, though? Well, Linus Corp, ticker code LYC, rose 8% to an 8-year high, $6.69. Why is that? Well, LYC, Australia's biggest supplier of rare earths, some 16 elements that are commonly used in mobile phones, electric cars and fighter jets. And China, who's currently the biggest supplier of rare earths, announced that they want to keep more of their resources to themselves. So this is favourable for Australia and LYC and those smaller rare earth stocks too. So if you are looking smaller for an up-and-coming rare earth stock, maybe look at Vital Metals, VML. They're planning to kick off rare earth production this year. And they've got experience behind them too, because the head of VML used to work at Linus, LYC. But for next week, there's 3 major pivots taking place, vital to consider. Firstly, Australia's economic recovery is intensifying. Our economy is rebounding faster than expected, growing 3.1% last quarter instead of 2.5% expected. And Australia's getting a lot richer too. The money we receive from exports hit a record $39.8 billion in Jan, thanks to iron ore prices rising 12% this year. So the nation has now got a record trade surplus of $10.1 billion. That's if you minus the money that Australia paid out for imports. But in this rapid phase of economic growth, we're seeing higher prices from rising oil and petrol and higher long-term interest rates making their way into bond markets. This is a common occurrence in economic growth, so shouldn't cause alarm, but how you respond is key. So we wanted to share how professional money managers, what they're doing at the moment. Well, they're buying into stocks and sectors benefiting from higher prices and higher rates, like cyclicals, financials, energy and commodity stocks. On the flip side, money managers are reducing their positions in high growth and tech names, especially those with limited or no profits, because they're likely to be stung by higher long-term borrowing costs. Now, this is why Afterpay, APT and Zip, Z1P have been sold down of late. Consideration 2. Who are the red-hot miners to perhaps poke your investment stick at, benefiting from economic growth, rising rates and inflation? Well, investors have been buying a lot into iron ore, rare earths, copper, nickel and hydrogen stocks. But lithium is the only sector receiving global unanimous government support. The UK, India, China, Japan and France are all phasing out or banning petrol cars, planning to go all electric. So car makers are demanding more lithium, which pushes up the lithium price and stocks in the sector. GM wants to go fully electric and rival the biggest EV maker, BMW. Large stocks moving with the lithium price include Mineral Resources, MIN. It's in a technical breakout. A smaller stock to look at, Vulcan Energy, VUL. It's backed by Gina Rinehart's Hancock Prospecting and is in a share price breakout. And lastly, where else can you get growth from? Well, Morgan Stanley likes the travel and leisure sector, but I guess For me, I like to look at early signs of earnings momentum, good results, and share price growth before investing. So with that in mind, companies that reported results in line or better than expected and are in weekly technical share price breakout, suggesting their shares could grow further north, include Qantas, QAN, Flight Centre, FLT, Webjet, WEB, and Corporate Travel Management, CTD. So they could be worth a look, particularly because Australia will soon have its second vaccine in the mix. So don't forget to look at those 2020 comeback stocks and commodity stocks. I'm Jessica Amir with Bell Direct, but from all of us, have a happy and safe weekend. See you Monday.